Hello and welcome to the Rupee Rakshak news of 22nd September 2023. This is a news for investors from a registered financial advisor. So this is authentic, unbiased and news that you can use. Let's look at the property market updates this week. SEBI imposes a fine of 6 crore to the former DHFL promoters for failing to disclose information which they are expected to pay within 45 days. And US housing starts hit a 3-year low, but a surge in permits indicate that there is underlying strength in the housing market in US. And Phoenix Mills plans to invest 2,000 crore for portfolio expansion, having already invested around 1,400 crore for projects in 22-23. And Signature Global's 730 crore IPO saw 54% subscription on the first day itself. Of course, including both the fresh issue and the offer for sale. So Mohan, property is one of the most favored modes of investing for many people. And many have a substantial amount of their net worth in properties. So what should be the right approach to property investing?
Investment in properties is what you are asking, Raghu. So that is what, like you said, it is true that most of the people, if they have made some good money, they will buy a property either with their available money, lump sum, or they take a loan and make sure that their EMIs are going and they are creating an asset. Now, you should be very clear, why are you putting money in the property? Is the purpose for using the property or is it for investment? Now, the clarity is that if you are using the property, then we have nothing to say. Please go flamboyant. So you want to enjoy life, you want to have the house which you are going to use. Don't worry about investment. Don't worry about the price. Just worry about whether you are able to enjoy. They say, oh, now my son got a job in US. Now I can't stay here. I have to stay with my son. Then it is gone case. Now you have absolutely spoiled your purpose because you invested lot of money for your requirement. Somebody who is buying your house will have no value for what you have built, and he will just count this whatever is the property site value. He has no value for the arch that you made and the attic roof for which you created a special place, and all that has no value for another guy. So if you change your decision of not using the property but you build it and buy it for using it, that's a big blunder. I have seen plenty of people doing this mistake. So be very clear, if you build to own and use it, please build it flamboyantly. But if it is an investment, you should have no emotions attached. You should make it a commercial property. Commercial, whether it is commercial on paper or residential on paper, for you it's a commercial thing. You should only look at how much money I am putting, how much the value will grow, and whether I am going to hold it and sell it when the price becomes this. What will be the price in 5 years or 10 years? Will I get the maximum appreciation? That is the only thing that matters. It doesn't matter whether it is 1,000 square feet, whether it is 5,000 square feet, or whether it is 20,000 square feet, whether it is in a metro, whether it is in a village, whether it is in agriculture, does not matter. If it's an investment, be very clear, what matters is your ROI, the return on investment. Will it make sense? Now, when I say ROI, you have to know at what price you are going to invest, and at a specific time in future. Now you are investing in, let's say, 2023, you want to sell it in 2028. At what price will you be able to sell? How real is that? What data, what facts will prove or convince you that it will be sold at that particular price? What are the risks that can come in between and you may not get that price appreciation? So it is going to be purely commercial, no emotional. Don't buy because it's your hometown. I am from Bangalore, so I will buy that is not investment. Buy anywhere, buy in Coorg, buy in Chennai, buy in Cochin, buy in Delhi, Gurgaon, wherever, doesn't matter for you. What matters is how much you invested, what will you get when you sell it. So be very clear about that investment, and if you are not sure about it, please don't get into that investment unless you are really sure. That is the most important thing. Unless you are sure that you are going, because these investments, mistakes are very, very costly, Raghu. So don't do this mistake. Be very, very clear. If you are investing, if you already own a house and you are comfortable there, don't keep dreaming about something and do things. So be very clear, because mistakes are very, very expensive. There are people who have lost their lives earning. If you are investing, your purpose is investment, then it is no emotions attached. You have to get appreciation on your investment. It doesn't matter whether you invest in real estate, or you invest in stock market, or you invest in a chit fund, or you invest in your own business. If it is business, if it is investment, it has to give you returns. If it does not give, it doesn't matter whether it is, what is the asset, whether it is real estate, whether it is your business. If your business is not doing well, then why do you run the business? If your real estate is not giving returns, why do you invest there? If your stock market is not giving you returns, why do you stay in stock market? So it's important that the ROI matters when it comes to investing in properties. So make sure that your purpose is clear and don't change your thinking too often. That is very costly affair.
Oh, okay. So Mohan, many people use properties as a means to generate monthly returns in the form of rental income. And how can such people maximize their returns on their rental income if they don't need the rental income for their monthly living expenses?
You're true. What you're saying is true, Raghu, because a lot of people I see, they buy one flat, this flat, they keep renting it, and they get something like, people who have got 3-4 apartments in Bangalore. One is where they're living, and 4 they're getting the rental income, and they're getting salary also. It's not that they use the rental income. So how do you maximize rental income? Today, if you see the rentals, a 2 crore worth of apartments gets you 30,000 rupees rent per month. So if you calculate 1 year income, 30 into 12 months, 3.6 lakhs. What is 3.6 lakhs on a 2 crore? It is less than 2% for the year. Now, over and above that, you pay the tax. On this 30,000, you are paying 10,000 rupees tax if you are in the highest tax bracket. Then you are doing all the maintenance. So the rental yields on residential don't give you more than 2 to 3%. The highest can be 2-3% rental yield. So rent itself is small when it comes to the income generation. If you have a commercial property, then maybe you may get 5%, 6%. Again, it is less than a normal FD also. So you should it should make sense for you. If you are already tied up with this rental and incomes, at least that 30,000 should grow for you. Ideally, you should do a SIP either into the stock portfolio or into a mutual fund. The easiest is to do with a mutual fund if you are new to stock market. Go to rupeerakshak.com. There is readily available stock baskets as well as mutual fund baskets. Ideally, go to a mutual fund baskets. If you are anyway going to wait for 3 to 5 years, then you should pick up a large cap, one mid cap, or there is a multi cap basket. So just invest in a multi cap, and whatever rent comes, set up an SIP. Like an EMI, if you get rents on 1st of the month, set your SIP as 5th of the month. So the money should not stay in your bank account. It should, whatever rent comes to you, it should move into your investment account so that you take the advantage of equity returns for your rental income. Now, beauty is the rental income is also growing at 15-20%. Now, the Indian equity being very attractive. For the next 5 years, you are going to see huge returns in equity once the GDP starts moving into double-digit returns. Now, currently we are at 6.5%, 7%. In 2-3 years, we might expect that it will touch 10-11%. You will see magic happening on your money. So don't lose that. All your rental income, please make sure you start doing your SIP into equity mutual funds.
So viewers, in summary, the rental income itself is a very low percentage of the property value and also is taxable. So therefore, it is prudent to invest the rental income regularly in a mutual fund SIP in rupeerakshak.com. So thank you so much, Mohan.
Thank you, Raghu. Thank you.
So that was the weekly updates brought to you from Rupee Rakshak Studios.